Good morning, everyone. Welcome back to the RationalInvestor.com's daily brief. Nice to see everybody in the saddle. Actually, we had a pretty full, the room filled up very quickly here this morning, and we are live on YouTube. So great to see everybody here again this morning. It was awfully nice to wake up to a nice little rally in Bitcoin off of these lows. So it turns out that weekly support level is pretty solid. And I heard in the community, I saw people banging out doubles and banging out winning trades. So that always puts a big smile on my face that we're learning, we're growing, we're prospering, we're getting better every day. And those people that bought into this stuff, some of the tools that we're trying to teach you on the site actually work to make you money from trading. Woohoo! We've got actually three different things I want to review with you here today. First off, we got the mayor of Vienna going to crash LA pretty soon here. And so as a result, we're all us West Coasters are starting to get jazzed about maybe popping down to LA and having a nice little meetup there. So Alex, how you doing this morning, sir?
Pretty good, yeah. Let's have some mayor time in LA.
All right. Hopefully, Alex said that he would to try and help and maybe build out numbers and sort of get an idea of where everybody is. He's going to throw together a Google Doc to just sort of little direction here with regard to the group meetups and stuff. So everybody on the site should, if you are interested in this LA meetup, everybody should just pop into that document when Alex posts it on the site, and by all means, if I get it, I'll post it out. I think there's going to be a group of us coming down from Vancouver to crash the party. So this would be a lot of fun. There's a cute little trip we got planned here. So watch out for that. Then the second thing I wanted to mention is we have Adam here today. Adam has done such great contributions to the community, really helped us understand the situation in Puerto Rico. And he's got another presentation for us this morning. I think it's about maybe 15 minutes, 10 minutes, something like that. Adam, you want to say hi to everybody?
Hello, how you guys doing today?
Awesome possum. So probably around the 9:45, 9:50 West Coast time, it's about 9:05 right now, we will open up the floor for Adam and his presentation. And thirdly, we have Mr. Bear here this morning, going to give us a nice overview of what he's seeing in the market. So I'm super excited about that. Mr. Bear, how you doing this morning?
Hey, I'm doing well. Thanks for asking.
Awesome. All right. So Alex has already given us the link to his Google Doc, TRI LA meetup. I'll just put my my name, Brian B. wants to participate. So I'm on there. If you are interested, I would highly recommend you just at least jotting your name down. Jonas, we're all crashing at your place in Culver City, right?
Yeah. Yes. Okay, let me get the garage ready, all right?
Oh, you're such a sweetheart. Remember the napkin. So,
sorry
Jonas,
to
if you are interested in participating, throw yourself on that list, and let's sort of build out sort of a list.
Yeah. One more thing. Maybe also put in the dates when you're available or when you're ready to have a meetup, so we can maybe find something out there as well.
Yeah, absolutely. Let's put this together. Totally awesome, dude. You rock. And let's spend the next week or so just sort of filling all this out. All right. Without further ado, I would really like to get the most out of Mr. Bear this morning. So, Mr. Bear, where are we going to start our adventure today? What's Mr. Bear doing? He's got his microphone muted. Does he know? There he is.
Sorry. So there's an LA meetup. That's pretty cool. I think I'm actually going to be in LA at the end of January.
Yeah, I think I remember hearing you were going to come out to the West Coast around that time, eh?
Yeah, that'd be cool.
Are you thinking about crashing the UK meetup? Because I think we have a big UK meetup planned here in the next week, or I guess the next 2 or 3 weeks as well. So really great to see all the social here on TRI. That's so awesome.
Yep, I'll be there.
Yeah, excellent. And I think also Marat posted in the lounge coming in from Berlin. So we're getting people coming from all over Europe going to crash that UK meetup. So super excited for you guys. Okay, we haven't got a lot of time here today. So where are we going to get going here? Well, what do we want to do?
All right, so first things first, we'll hit up so Powell spoke today, or released comments at least, about what he sees as far as further interest rate hikes. And he basically came out and said that he sees the current interest rate level, and you can see the headline here, as just below neutral. But for whatever reason, we're seeing the markets rally here. And I think that's, at least from the commentary I saw, reasons because of algorithm trading. So I think that they're probably still on track to raise, at least from what I saw. I think what the market really likes from what his statements were is that potentially the velocity in which they'll be raising may be decreasing. And also, for the very first time in really Fed history, they mentioned that they are monitoring the equity markets and how those are responding to rate hikes. And I think that this is probably the first time we're seeing a Federal Reserve sort of reacting to not only the equity markets, but also to comments from the president. So now you've got a president here who's basically politicizing the Fed and putting pressure right back on them, sort of not to do what they historically do, which is to go too far, too fast in either direction. Whether or not this is going to be a good thing that the Fed is starting to pay attention to things like Trump comments, and Trump has installed sort of a vice chairman from his own selection here. So it's definitely an evolving event, and this is something that we really haven't seen before. And I think the markets really like some of these comments that have come out. You can see the Dow's now up about 425 points. So definitely a nice rally coming out of there. And interestingly, if the Fed is going to raise, I think that pretty much gives the dollar the green light here to continue going higher. And that's what I saw before the Fed comments. Let me see if I can bring up that chart of the dollar. Dollar looked like it was about to break out of 97.5 or 96.5, I guess it was. Oh, look, it's coming off a little bit. So there you go.
Yeah, I would imagine the dollar might get punched in the nose here.
So how does that relate to raising, the potential for rising interest rates? Why would we see the dollar?
My interpretation there is when he says we're near neutral and we just had crude oil collapse. Keep in mind that usually it takes about 6 months for these kind of things to work their way through the system. So this is going to be extremely deflationary for the market. This big drop in crude oil prices. Now, if we go zipping right back up top, well, that takes that off the table. But for the time being, this is in essence like the Fed. Ironically enough, it's almost like them cutting interest rates in a weird sort of way. So I don't think that the Fed needs to worry so much about inflationary pressures with this falling energy price. So when he comes out and he says, well, maybe we're at neutral, whatever, it makes sense to me that the market's sort of saying, okay, well, that's probably it for the interest rate increases. And now we have to actually worry about whether we're actually heading into like a deflationary spiral. I think for a guy like me, the real important thing is I'm not even going to listen to, politicians. I actually saw one of the major news agencies said they're no longer going to follow Mr. Trump's press conferences because he's just lying and it's a waste of their time. I mean, one of the major news outlets says they're no longer going to follow the president. So my hunch is the market is sort of, and the Fed, I think the Fed doesn't care about Mr. Trump. They'll just do whatever they want. And I actually heard this morning that Trump was saying, appointing Powell was the worst decision I ever made. That kind of talk, right? To me, it all comes down to this Fed spread. You can sort of see here is the Fed sort of just humming and hawing. But really what we have to watch is what does the corporate interest rate market do? And, we talked a little bit about spreads narrowing. You can see how close the 2 and 5 years are here. If this starts to invert, then I would imagine the Fed's going to be like, oh, shit, we got to cool it here. It makes sense to me that the dollar is going to pause if the Fed is starting to send messages to the market that, hey, we need to calm down. But the irony of it all is if the stock market goes booming right back up top, then they're going to be like, okay, well, we did our job. Now we can go back to raising interest rates. So, I would imagine the U.S. dollar index could be under a bit of pressure here for the next little while. Also, too, I might even say that, when is the Fed decision? This is all just sort of talk, and they're trying to talk the market up, talk the market down. When is that actual Fed rate decision? Do you know when that date is?
I think it's December 15th or something. December Fed decision.
Right. So, here's the S&P 500. If we get a rip or a rally that takes us right back up top, then they're going to be right back on the, we got to raise interest rates and calm things down. But interestingly enough, like with regard to that crude, I don't think the market realizes how much work the actual crude market here did for the Fed. In essence, them raising interest rates, they wanted to break this thing and they broke it. So yeah, I can understand why the Fed would say, okay, maybe we can sort of cool it a little bit here.
Yeah, I think that's a good point. So December 18th to the 19th is that decision here.
Oh boy, that's forever away now, eh? Jesus. So yeah, I mean the market's got a couple of good weeks. We could easily see the stock market rally right back up top, and then they're going to be like, "Oh, we got to step on the brakes again." Okay, yeah. So big moves with the Fed. I think that makes a lot of sense. The little algos and stuff. I mean, for the record, I think I'm feeling pretty happy. I thought it was interesting looking at this SQQQ. This is the short proxy on the Nasdaq. Looking at this now, I'm like, whew, thank goodness I got the hell out of that trade. So on balance, and of late, we've been talking about harmonic objectives getting hit. Interestingly enough, from the momentum perspective, I'd be really interested to get sort of Joshua and Julian's interpretation of what's going on with RSI here right at the moment, because you can see we're trying to break this downtrend line and we're trying to recapture this line. This sort of says to me, like momentum wise, we're probably going to rally up against these highs. If we can break out in earnest, then I think the stock market could easily run right back up into this gap up top here. And this is almost exactly what happens almost every year, guys. September, October, everybody turns bearish, and sky's falling and stuff, and they just can't see the market rallying on the other side of this. But here it comes. So I don't really think there's anything. Ironically enough, I don't think there's anything really out of the ordinary here. This is pretty business as usual. All right, what's next on your mind here this morning?
Yeah, I mean, just some names that I've been looking at, but I think we should probably move to crypto at this point. The other thing that I just want to mention before we move on is that I think what I missed here is that the market basically interpreted from the change in his statement here in the beginning of October. He said the Fed was a long way from neutral, and now he's saying that the Fed is pretty much at neutral. And again, I think it's a good point that, they're basically talking about what they plan on doing, or what it's hinting at potential plans here going into that Fed decision. But this could just be simple talk to get the president off of Powell's butt here, and they may end up raising anyway in December. But you just never know until that decision actually comes up. Who knows? Maybe the market actually ends up rallying into that event, and they're just like, okay, Now we have the green light again. Surprise! And that's when I think Federal Reserve start to get in trouble, is that it's always been Fed policy to sort of broadcast what the Fed wants to do. And now that it's sort of reached it's almost at a balance point, right? You tip the scale too much in one direction, it's going to end up moving in that direction. And I think the Fed has reached that point where they can no longer broadcast what they're doing without significant backlash. And now they're kind of caught in a really difficult spot. So this is going to be really an important decision from my eyes as to what they do going forward. But I mean, as far as any other stock market commentary, I think I'm going to leave it at that and kind of transition here into crypto because a lot's been going on. If that's okay with you, Brian.
Sure, you're driving the bus today, sir. I mean, I sure have talked lots lately.
Okay, cool. So let's move on. And the first thing that I want to do is I want to just highlight a story that I saw on Reddit today. And this is this was a post by some random user that I found. And it's basically a story about, let's call him a kid. Let's call him a young 20s, maybe college age. He told his dad about Bitcoin back in 2000, I guess it was last year. He told his dad around October about Bitcoin, and his dad's like, well, let me do some research and I'll look into buying it. So he does his research and he calls his son in about, call it November, around Thanksgiving time, and tells him that he bought Bitcoin and he's very excited about it. So he buys the Bitcoin, and then obviously price starts coming down. He doesn't hear about whether or not he's sold or if he's buying more. But his son basically says in the story that he's been dreading this phone call from his dad for the last couple of months since Bitcoin's been going down. And he got the call from his dad and he said, well, it looks like Bitcoin's dropped below $4,000. I just bought more. And I wanted to call to tell you that maybe you should consider doing that so you don't miss your chance. So I thought that was a really nice story to hear. I mean, while, technically maybe this, and we'll dive into the technicals in a bit here. As far as the public is concerned, it's just really fascinating to me to see the public's faith in this story, despite so much news coming out about, people were too quick to go into Bitcoin. The price was manipulated higher. This thing was overvalued so much. And while those comments are not wrong, as we're seeing now that the market's come back down, I think comments from people like Jamie Dimon or comments from other CEOs and big institutional guys that are saying, well, really, there's no use case for Bitcoin. Bitcoin was just this thing that came around and it was like the flavor of the month. And it really has no business being a US dollar replacement. It has no business in the broader market, and it has no business being an asset class to be traded. Well, I think that's a little bit too far of a stretch. And I think those guys were just adding fuel to the fire as we were coming down here in price. And we saw price really accelerate to the downside over the last week. And a lot of people have capitulated. I don't know if, how many or what it looks like, but I can say that from the venture cap side, especially the Ethereum guys, they are hurting big time right now. A lot of the guys who have raised money through ICOs, they're effectively bankrupt. They've lost millions and millions of dollars. Their projects are now worthless. They've actually had to empty out their treasuries for their ICOs and move a whole bunch of Genesis Ethereum to cover or keep their companies afloat. And many of these guys they're not liquid anymore. So I think that from the ICO space and anyone that was in Ethereum, that industry is hurting a lot. I think a lot of people have liquidity problems and aren't able to kind of get themselves off the floor here. But I did just want to highlight this as kind of like a feel-good story before moving on to the real meat and potatoes of what's going on in the market. And as far as news, before we move into technicals, and that is, I thought this was a really big story. Coinbase is launching their own over-the-counter crypto trading desk here. That goes live through their institutional Prime product that's offered through their website. Anyone who has traded on Coinbase, you probably, I think this might be their institutional customers only, but there weren't many details as far as, who's actually using this, how much they're planning on giving out, what you can actually go in and out of in terms of amount. But it does talk, this is a new product from them. No one's been able to trade OTC with them the only services that were around were Gemini. Polo has one. There's a couple. There's like this big three that the institutions are using, and those are kind of the real bread and butter for OTC desks. But I think now that Coinbase has gotten in here, I think that's really big news. Big news for Coinbase themselves, and I wouldn't be shocked to see more and more institutions kind of funnel in, because Coinbase does have their own custodial service, and that's not to say that going through any other the other OTC desks is an issue, because you're obviously getting physical Bitcoin. But I think a one-stop shop is very much interesting for any institution or big major retailer here. So this is, I think this is cool news. Coinbase is really pushing ahead with trying to be that kind of bank for crypto. So that's that. The next story here is about Switzerland's ETP, which we covered last week, and that was Switzerland launched their own exchange-traded product, which is a basket of coins by this firm called Amen, which included Bitcoin, Ripple, Ethereum, Bitcoin Cash, or now they're calling it Bitcoin AB. I thought it was ABC, but whatever, and Litecoin. And then there's also minor funds with a couple of the anonymous coins. But the important thing out of this is that they're seeing a daily turnover rate of roughly 425,000 Swiss francs, or about 425,000 US dollars daily closing. And this was higher than a couple of the other commodity products that are traded on that exchange. But, to put this in perspective, some of the largest ETFs, like the Spider Gold shares, they have an average daily value of $987 million. So a couple orders of magnitude larger there. But interesting nonetheless that there is interest in this product. And this article actually goes on to talk about that the reason for that interest might have actually been these institutional guys or hedge fund guys who are trying to arbitrage because they've lost so much money with the declining price. They're trying to take advantage of those opportunities. And I think we actually have a presentation from Adam about arbitrage, if I'm not mistaken. So that was interesting. The ETP, the product actually went down. So it debuted at about 1380, dropped 15% to about 1240. And that's probably less of a drop than we've seen in Bitcoin, because Bitcoin came from about 6,400. We're sitting now at about 4,000. So Bitcoin's come off, call it about 20 to 25%, I think, from those highs, if my math is right. And it's interesting to see that ETP didn't go that far down. So that's that. This is this. A couple of other news articles that I want to keep going. I didn't bring those in here yet. There's a really good article from CNBC. So I don't know if, Brian, you talked about this at all, but Consensus is happening in New York City this week. And there's been a couple of really key announcements. One of those, I don't know if Clayton was interviewed at this, but my next story does have to do with Consensus. Yeah, so it looks like he did say this at the Consensus Invest conference, that before he decides to approve a Bitcoin ETF, and this is like your teacher when you're in high school or middle school, and the teacher's like, hint, hint, this is on the test, people. This is pretty much him saying, look, you want this thing to be...
I've never heard anybody say that before.
Right. So, I mean, he's pretty much broadcasting, listen, guys, if you want this thing to be approved, here's what you have to do. And he
Didn't they? I thought yesterday they came out, somebody said that they were just going to put the kibosh on this thing.
I don't know, on the ETF?
Yeah.
Who said that?
And I actually made the argument that that was one of the reasons why Bitcoin rallied. So if they're going to come back out now and say, okay, well, we're still talking about it, then all right, Bitcoin's topped.
So this story is from 18 hours ago. So that would put this at about 4 o'clock, 6, so about 6 p.m. yesterday. So I don't know who said that. I didn't actually pick that up in my feeds.
That's okay. I'm sorry for interrupting.
No,
your hint, hint, hint. It's probably a question on the final exam. that got me to come off mute. I'll go back on mute.
I'm glad you like that. So just to be clear, right? So the ETF decision here isn't supposed to be officially given forth. Like the SEC has until February 27th, 2019 to make their decision here. There's been a whole bunch of all these other dates and give us comments about what you think crap. All this means nothing. They have until February 27th, this VanEck SolidX ETF shares thing. They have until that date to make their decision. And again, Powell wants 3 things here before an ETF can be approved. And the first is he wants to see market surveillance. So as an SEC guy, they want to see the same type of software built into the NASDAQ, built into the S&P that prevents market manipulations that can't be tracked. So and that's what's happening in crypto. You're getting spoofing orders, which is when you put a shitload of contracts up on the board and you don't actually intend for them to be filled. And they're just intended to move the market to say, look, I'm betting or I'm bidding, call it $50 million at $4,000. So everyone looks at that and they're like, wow, there's a solid floor there. So people start pushing the price up to jump ahead of that because they think this guy is propping the market up and going to bid it up. That's called spoofing. When he pulls his bid out and he goes, just kidding, guys, that wasn't a real bid. It's actually very much not allowed in real markets. You can't do that without getting fined, whatever the hell happens to you. I'm certainly not in that world to understand, nor would I ever want to be involved in doing something like that. So he's saying that we need the same surveillance to prevent that from happening. Okay, well, you've got Gemini, who is partnering with NASDAQ right now. NASDAQ has this surveillance. They've already come out and said that, well, we've implemented it into our exchange. Okay, great. So how do the Winklevoss brothers, maybe their ETF would be approved? Well, no, the SEC said, no, forget it. Risk of fraud and market manipulation still. But I think that since this has sort of this surveillance software has crossed into crypto, and now that Jay Clayton is saying we really need this to get approved, don't be surprised if this starts getting built into at least, and this is another story that I have to cover, the spot markets that these products will track. And this is going to be an evolution in a way that none of us have ever seen. So put that on hold for now. I'm going to talk about that next, those spot market prices or spot markets that these products are going to track, because currently these products sort of use a basket of the, let's call them shady exchanges, the ones that aren't OTC, your Bitfinex, your Polo, your OKCoin, your BitMEX, your Bitstamp, whatever it may be. Those are going to be a thing of the past. So keep that in mind. We're going to move into that in a second after I cover these 2 other issues that Clayton wants to see resolved. The second is that he wants to see custody improved. If you're going to have an ETF, you got to have physical custody of these things. I don't think he really understands, what custody solutions, how they work, what real crypto security looks like. I'm sure he has somewhat of an overview understanding of what it is, but I mean, the nuances to the technology they're overwhelming. And for a guy like him, who's so busy, he really needs a board of directors at this point. He needs a cryptocurrency board of directors to help him make these decisions. And I don't think the SEC has that kind of funding to do that stuff. But regardless, he said and it says right here, said custody offerings still need to be improved and hardened. Well, now you've got Coinbase, who's offering custody. You also have Circle, aka Goldman Sachs, who's also offering custody. So this is these are 2 big companies who are offering these custody solutions. But I think that he wants to see these 2 companies, VanEck, SolidX, he wants them to kind of have their own custody solution, is kind of what I'm implying from his statement here. So maybe look for them to come out with their own custody solution, or at least a partnership. Now, if you see them say, oh, we're partnering with Circle and we're going to use their custody solution, well, then we knew Goldman Sachs was behind this whole thing after all, and that they were just positioning for that. But, that's just speculation. And then the third thing is, manipulation. You've got custody. And where's the third thing? We have manipulation, surveillance, collaboration. Oh, and he wants to see these indexes. So this is basically the next thing that I have to move into, is that he wants to see the tracker of these indexes sort of improve, like better methods for tracking the spot price. And that's what I was getting at. And this is the next article that I'll move into here, which is that NASDAQ and VanEck, which is, that one first half of that ETF. So there's VanEck, SolidX. Now VanEck is partnering with NASDAQ, and not only does NASDAQ want to bring their own futures product, which they plan on launching, and this is all going to start to get extremely confusing because these institutions are bringing so many products to market that they're going to get mixed up at this point. So now you've got NASDAQ wants to bring their own futures market. You obviously already have CBOE and CME. That's been around for a year. Then we've got this backed/ICE product that was supposed to be launched beginning of December, which has now been postponed to January. And that's another sort of futures product that's going to be physically settled in actual Bitcoin. And then NASDAQ wants to launch their futures product, but we don't know if they're actually going to be settling in cash or physical Bitcoin. And now you've got VanEck, who they want to start using sort of their own index. And this is really fascinating to me in that they're going to be using something called their MVIS, or the MV Index Solutions, to provide data for these future contracts for NASDAQ. So NASDAQ's going to have their own index, and this is going to track actually a couple of OTC markets, as well as, I think, Circle's market, and the other one was, I believe it's Gemini. And for whatever reason, I'm missing where these exchanges are being tracked here, and I'm scanning this and not finding those, but I'm pretty sure, and I'll cover that, later if that comes out again. But so this is the point here, is that there are these new indexes that are being tracked. So like I said previously, this is sort of when you're going to see this transition away from your traditional exchanges that most of these products are tracking, and instead it's going to move into the institutional broader market. We're the real big boys here. We should determine the price, not these quote unquote free Bitcoin markets, which, whether or not they're actually free and not highly manipulated, I mean, that would be surprising to me. But either way, there's a transition happening, and this needed to happen. This just needed to happen. You really wanted to see crypto grow up. Well, this is part of the growing pains. It's a transition. So Bitcoin's going through puberty right now. All of crypto is going through puberty. It's starting to become an adult. It's moving into the broader market. You're seeing these companies saying, you know what, we can no longer rely on these exchanges to provide us real data that we can actually depend on, because people like the SEC chairman, Jay Clayton, are saying, no, that's really not going to work here. You can't use these exchanges. They're full of manipulation. So these guys have come out and they said, well, our solution is we're just going to make our own. And that's just the way it's going to work. That's how this whole space really grows up. So I found all of this just, it's really a paradigm shift is what we're seeing here. And it may take 6 months to a year before we see all of this sort of transition and see all this institutionalized products really come to market. And unfortunately, it's really everything that people didn't want to see in Bitcoin and crypto. But at the same time, it's really what was needed in order for these markets to mature, in order for prices to continue to rise. So it's a double-edged sword here. So the next thing that really needs to be covered here is Goldman Sachs is still not ready to handle customer crypto assets yet. And I think this kind of speaks to the narrative that Goldman is just like preparing the institutional side. They don't want to get the public too excited. They don't want to see people pushing their coins into their exchange. Now, however, and this is my own belief, if you see VanEck and SolidX say, we really want to rely on another institutional product to provide custody, then maybe you'll start to see Goldman go, you know what, maybe we're going to open up our products to customer deposits, and that starts to become a part of their repository. And it's another way of accumulating physical coinage to back this ETF. So I think that, while there's a lot of regulatory hurdles there, I mean, that looks like the potential to me for another way of going about this whole thing. So that is pretty much our Bitcoin news. And then the last news article that I want to cover here, and I've got about 13 minutes before I want to jump into technicals and hand over to Adam. And I guess I'm the one that's talking a whole lot, but I guess that's okay because I've been gone for the last few days. And the last thing here is that there's an Ethereum vulnerability that's kind of been kept quiet and really hasn't been talked about very much. It's not a big deal for people like you and me who don't operate exchanges, but if you do operate an exchange, evidently there's this thing that if you didn't set a gas limit for spend on your exchange, you could basically drain an entire exchange's hot wallet. Because if they don't have, if you set the gas super duper high, what'll happen is if the exchange doesn't have that gas token tax available, they'll just drain the hot wallet. So they'll drain Ethereum right out of that wallet to cover what they set the gas limit at. So I don't know if this has actually been used in the wild just yet, because these are some cryptocurrency, quote unquote, security researchers, and they discovered this vulnerability. I don't know if they were tipped off, if they really just found this by themselves. Maybe this is something that has hit some exchanges and they've been keeping it quiet. Something to keep in the back of our minds. You know, we usually find these news articles and then somehow a couple weeks later, you find out that some exchange got in trouble, like the Tether story. We knew something was brewing there before all the outlets started picking up on that. So, I mean, this probably isn't such a big deal, but you got to keep it in the back of your head. If you've been having issues with withdrawals on Ethereum, or you're having a lag time with any of your other withdrawals, maybe this has to do with it. And that may be an exchange that you might want to move your coins from just for the time being to see where this really leads. And this is just a small story. It could have just been a nice, you know, white hat hacker, the security researcher who's just like, okay, we found this, here it is, you guys need to patch your shit, which is basically set a limit on your gas usage and you won't have this issue. So just something to keep in mind here. So that's the last news article here that I wanted to highlight before moving into the technicals. And now we can finally cover probably what everybody's been waiting for, which is what the hell's going on in price here. And this has been one hell of a ride. I mean, I actually took from Thanksgiving until about Monday off. I didn't even touch this market. And I came back in and I saw this, and this looked pretty wishy-washy, or I guess it was really this on the way down. And I really was just waiting for this thing to give me a bottom. I actually was firing off longs into this area. Maybe it was into this area here. And, you know, this was almost like a false signal here. So I actually got trapped, and I took a couple of long positions that ended up getting stopped out. And usually this is what happens with my trading, is I'll be a little bit early to the party. I'll miss maybe once, maybe twice. And then I know if, you know, my stops are getting hit, but yet I still have all my reasons on the table, that I was just too early. So I kept at it. This was really scary. I wasn't actually in a position here. Oh no, actually this was, so while Mr. Bear seems like a very experienced and great trader, every now and again I get caught with my pants down, and I'm not perfect, guys. So I actually had a position open where I had a stop set, and this was at like super early in the morning. I had my trigger order and my stop order set, and what ended up happening is they dumped the market so fast that the buffer that I usually give my orders in order to get filled to get me out of a position just wasn't enough. This market took off way too quickly to the downside before I could take my position off, and I got handed a pretty hefty loss into this tail here. But, you know, I took the loss. I said, all right, I'm going to take the next couple hours off. I'm going to go to sleep. Woke up the next morning. This was yesterday morning. And I see that this thing's starting to put in a W. I'm like, okay, I was wrong these two times. I'm going to take this position again. I ended up taking my long. You can see that we actually had divergence working. We had market structure confirmed. I fired off my long right into this on the confirmation and just rode this thing right up into about 78.6 last night. Ended up doing just fine. The loss has been nullified. I actually got handed a little bit of profit on top of it. So that was very nice for me. And I actually was really surprised to see the relative strength in this market continue to move beyond our reload zone. So I've got this hourly chart on because the hourly chart to me has all my reasons for a trade on it, like I highlighted before. So where was I out of my trade? Right here. Now, I can't really be chasing after this point. But what does this mean to me when I see a market go beyond a reload zone on an hourly time frame? Well, to me, it means that there's relative strength here. And while you're looking at this chart, you probably might notice a couple of things. The first is that we've got this building divergence, not confirmed just yet. You've got 200 period moving average kind of holding the price up right now. You've got Willie Stupid. I'm actually going to be hunting a short, and I actually might have just been filled on this candle body, candle wick here. I actually had some orders up here to short. So I'm firing off my shorts here because I believe that we're going to have a slight pullback. I think this market's taken off way too quickly. I think that whatever was happening at consensus caused a little bit of excitement. Who knows what the reason is? Maybe we just went technically too far too fast here on the downside, or we just established a short-term bottom. Doesn't really matter, right? I'm a range trader. I don't really care at this point. I just want to make money from the ups and downs of trading. And to me, the way that this looks is we're probably a couple hours away from this thing failing. So I can see this kind of being your neckline here. You've got your first top here, neckline, make a lower high, and then boom. And I can't talk about targets, unfortunately, but just remember that the relative strength of this market has continued beyond its reload zone. So I would expect pullbacks to not be as, shall we call it, aggressive in magnitude as I would otherwise expected in the previous market state from last week. Now, there is one kind of wild card to all of this, and that is the reason for this volatility, while it may have been chalked up to consensus, bottoms in markets. If you actually Google, and people should know about this, and I'm actually, I should probably pay more and more attention to this, but the CME Bitcoin futures product is actually expiring. So the November contract expires this coming Friday. And I was going back into my trading log and looking at how I usually perform the week before the CME expiration date. And that's when I actually do my best. So that actually isn't surprising here because this thing is expiring on Friday. And I think people are unwinding their positions. So if this market, if everyone who took their positions into the November contract was short, I bet your bottom dollar that they are taking their positions off here, and any of that downward pressure that existed on this market is now abating because they're taking their profits here. So I think that's the reason why this market may be coming back up here. People are going to be looking to reestablish their positions. Maybe for December, maybe they don't until January. We'll see. But again, I do see this slight pullback here. And then we have to use our higher time frames for cues as far as whether or not this market is going to continue moving higher. You can see here that this is a divergence from here to here. You've got a divergence. This thing is confirmed here. Now, the problem for me is that this is very, very messy market structure. I'd really like to see this thing come back down, maybe tag this moving average cross, consolidate sideways, maybe for a couple candles, and then move forward. That to me would be great. But the fact of the matter here is that this 4-hour chart still has more room to go. So firing off shorts here is super anxiety ridden. You got to be really nimble. Make sure you have your stop set very conservatively here, because these higher time frames, while not stupid and don't have structure, they still could potentially move higher. And then again, daily chart for me looks a little bit different. I really don't like the look of this divergence. I do like that we're seeing kind of like this little W coming in OBV, which I'd like to highlight if TradingView will collaborate, or there we go. So this looks really nice, right? You can see this nice W coming in. And again, this is just OKX, their data. And then the other thing that I wanted to look at is it looks like shorts keep coming in here. So it looks like a squeeze might be necessary to get them out of, cause them some pain here. And then this daily candle, let me take this off, looks really interesting. So maybe we're a couple days, maybe not until next week, before the daily gives us a nice bottom. But make no mistake about it, this is starting to look very much attractive for a short-term pivot. I'm not calling bottoms by any means, but from the hourly and the way the 4-hour looks, it's just nice to see that since really beginning of November. When these CME guys put on their positions, this market's gone downward. So I think we really have to look and really take into account those institutional products, because they're the ones that are going to be driving these markets now. They're the ones with the big money, and big money moves markets. And that's where we need to take our cues. As far as Ethereum is concerned, it's really the same stuff. I mean, all these markets are so closely intertwined that you saw the same move in Ethereum go beyond reload zones, go kind of, I guess, almost back to 120. I think the high here was 119 and change. So same thing here. I see the same divergence. You could play both of these markets if you want. So this looks like a nice range trade setting up. As far as further longs, you got to see where this market settles out. It's obviously way too late to be going long here. You could get burned on a margin call. Make sure you are not doing anything stupid to blow up your account. But I think that about covers it. You've gotten a really hefty dose of Mr. Bear today. I hope that you all enjoyed everything. I think I've covered most of everything. The only other thought that I just want to talk about is that some of the big firms that are very much in tech, like IBM, blockchain type companies that are looking to implement blockchain solutions, like IBM and what's the other one? There's another firm. I'm probably not supposed to say at this point. So maybe we'll leave that until I'm cleared to talk about it. But as far as IBM's concerned, I am allowed to talk about the fact that, this is public knowledge too. They are launching several blockchain solutions for several different companies. And I don't know if that directly correlates to the way that Stellar and Lumens perform in the market, but there's a lot of demand for their product. And whether or not that can have an impact on the price of those coins, I think it's worthwhile checking out. I think that's probably the one coin that we've seen perform probably the best relative to the rest of this market.
Quack!
Yep. That's right. You did post a really nice chart of Quacker. So maybe we want to end with you showing us that potential double bottom coming in. Is that what you want to do?
Not potential anymore. It came in.
Oh, did it? That's really good to hear.
Yeah, I mean, I before we end here today, and we're coming up on the top of the hour, so we should probably wind this up. But I've just gone and thrown in a bit off of the double bottom here on Quacker. I told everybody I was going to do this, so might as well be a man of my word. So I'm just going to add to the position. Cute little trade. I'll play the double bottom here. But on balance, yeah, it feels like the tone of the space has changed a bit here, so that's good. Got little dojis. Doge is actually backing off. If anything, we kind of made the argument through the weekend that we were running into Doge to get out of Bitcoin, which a lot of people on Twitter found quite amusing, but it's just working away. You remember Jesse Couch the other day. I don't know whether, and actually really we should bring him on to talk to you guys, but he put out a tweet saying, I got the funny feeling TRIers are going to be banging out a lot of doubles over the next few months. So everybody just get your act together, get your shit together, get it all in a nice little pile, get your plan all nice and crisp. I believe opportunity is now here. And the only thing I'll just sort of add to Thomas's talk to you is I think that the CME trade was a beautiful, just an absolute beautiful example of for our level oneers, learning about what do markets in transition look like and the idea of triangles. So sometimes the market looks like a double tops, an M, double bottom, W's. Sometimes can look like a triple top, triple bottom. Sometimes it can look like a head and shoulders fractal. Well, here's the third formation that we try to teach in the level one program is the idea of the triangle. And just try and think of it as the reload zone within the reload zone, RLZs within RLZs. So that's basically what this was through here. And I found it fascinating that, on that sort of liquidation dump that they tried to wash the market out. Some people got washed out, others didn't. But notice how the triangle was, on a clothesline basis was just stunningly respected here. And also, too, on the broiler chicken show, On the weekend, we had sort of mentioned that there was no way that the Chicago boys, with Bitcoin prices way down here, there was no way the Chicago boys were going to sort of be left behind. So yeah, I do understand. And this, of course, was a hugely important weekly level. Even on, like I pulled up across the board, like on Coinbase, this was off of this level was off of, that's that same sort of stamp level. This is the daily chart, but you can actually see on the weekly chart, same sort of logic as that stamp level. You guys ever heard Brian talk about candle bodies for trade location, on a weekly chart? Wow, is that ever significant? So I definitely think this was a really, really important weekly level. And if we look at things like, and actually I did this on the Japanese market just for fun. The Phoenix market and the Japanese market look almost identical. So you can use them interchangeably, but this was that weekly gap level. And please, guys, learn this going forward. This is so valuable information. Try and find those higher time frame levels that are significant, and weekly gaps. Holy moly, that is hugely significant. And then just let the trade develop off of that level. I swear, you could teach a whole course just on this one chart right here. Interesting commentary too on kill zones, because that dump that flushed some people out was actually just following it was like on the tail end of a London kill zone, and it just so happened to be Tuesday, right? So what do we say? Market often pivots through Tuesday, Wednesday, London kill zones. In this particular case, they did it Tuesday. And notice this morning's rally, and again, if we go back to Chicago and try and figure out what the hell's going on in their heads, do you notice how that there was actually a gap, and that's the POC right there from that session right there? So this was the Chicago boys being left behind, and they're like, there's no fucking way you're going to dump this thing without us getting in off of the appropriate level. So that's exactly what I think is going on right now. We all know, right? There's no way in hell we should be chasing this. And then the only thing I would just sort of add to that conversation is our 4-hour chart here is trying to turn the corner. Keep in mind, these are new closing lows. So we probably should, ironically enough, candle body lows. We should probably be sort of targeting this level. What is that? 36.29 on Thomas's OKCoin. And if we do good old reload zones going right back down against the low, can you see how 78.6 is lining up with those candle body lows? So yeah, I don't think it's a good idea for anybody at TRI to be chasing this. It is encouraging to see we're finally starting to get the smatterings of trend change. I think it was really good value, and I don't know whether the public caught onto it or not, but we really tried to drive home in that broiler chicken show that when you hit these bearish, big harmonic objectives, you probably ought to just cool your jets. And I think we talked lots about how, late shorters got punished. I think that they set up just an absolutely beautiful trade here. But at this point here, we can't chase. It is encouraging to see double bottom. We do have a new clothesline low, though. So I definitely think we have to go down and test this low again at some point here. The question is, have we topped out? And what I'm worried about here, and actually this is a really good lesson that hopefully we can all just sort of learn from this, is, the level oneers are learning all about volume impetus. And really level 2, level 3, veterans, guys have been at this for 20, 30 years, right? There's no reason why we can't keep learning. As Thomas's chart sort of pointed out, this move to new highs here is now on a divergence, so we have to be careful there. Willie is stupid, so we really got no reason to be thinking about being a buyer here. And you can see there was a big burst in buying volume here. Then on this move here, a little bit lower burst. And now this move up into here, the buyers are backing away. So we'll know that the buyers are done when we have that level there taken out on an hourly basis on Phoenix. So I don't think they're done yet, right? And this divergence isn't confirmed yet. It's damn close, but it's not confirmed. And of course, we don't have any structure yet. So, you know, there is Mountain Man sitting there up at 4,500, big fat round number, yada, 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 right? So don't be surprised if we have to play around a little bit up here, but I really don't think this is a good place for us to be buyers. If anything, we have to wait for a consolidation. Maybe this bots out, 1, 2, 3 lows, and then we set up for another leg up higher. But for the time being, I think everybody's got to sort of cool their jets. Okay, I hope that helps.
Brian, you still wanted to mention the RRSP.
I know. So tonight, Stanimal's come back. Stanimal was one of our sort of principal RSP group meeting guys, and he's back in the fray, and he's got a couple really cool stock ideas. In fact, I've been throwing bids in on a bunch of these stock ideas. So we were going to plan to do. We usually did the RRSP meeting Wednesday evenings. You know, 5, 6 o'clock Pacific time, 8, 9 o'clock Eastern time. So if you are interested in investing in these penny stocks and learning about that, try to be on the site sometime around 6 o'clock Pacific time tonight for that meeting, and we'll be reviewing a bunch of ideas. And there's a bunch of these that are all right down in buying windows. So we've got lots and lots to talk about here tonight. And the latest one that he had that he brought to my attention is a lithium company. And look at what the damn thing's doing, right? It's just launching higher here. So if you are interested in penny stocks, please be aware we're having an RSP meeting tonight. Okay, now I don't know whether we can do this. It's 10 o'clock now. Adam, do you want 10 minutes to do your presentation here?
I can do it now. It shouldn't be very long.
All right. You have the floor. I mentioned the RRSP meeting, and Thomas did a great job talking about crypto there. So I think I will put myself on mute. Adam, you've got the floor. Where do we want to? And thank you very much, Thomas. Great summary. Love it. Adam, where do you want to take us this morning?
I just wanted to briefly share a couple of tools that I use in my trading, which I feel helps significantly. The first one was coin tracking. And coin tracking is great for, you know, paying your taxes and whatnot at the end of the year. It's a really good tool to sort of keep yourself accountable. But it's got all these extra features, which I find that I'm using every single day. So for me, I wanted to mention this to you guys because I felt like it was a worthwhile thing to know about. This is what the basic dashboard looks like when you check in. And it sort of keeps track of everything, when you enter different coins, when you sold, how many trades you had each month. And so it's got a lot of features. But the ones that I use the most, the tools that I use the most, are a result of the exchanges that I use. They don't tend to keep any historical data. So whenever I want to look up a trade that I made previously in Bittrex and Binance or any of these exchanges, the historical data isn't there. That's where I use coin tracking every day. Let's take an example here. We'll look at Stella, which we just referred to here. Last October, I entered into Stella, and I had a lot of action where I got double really quick. I refilled, bought another car, and then I got a total of 5 doubles out of this. But I didn't have any historical data in Bittrex about this. So I turned to to coin tracking, and you just punch in whatever.
Nicely done, sir. Well done.
Thank you. I like using the historical rates to sort of track yellow to buy, purple to sell. And this way I can refer back to my history on this. But also, you know, you'll see here the coin checkup rating and whatnot. There's different things that I'll add on to different charts, but these are basic tools. But one of the things that I really love about the coin tracking is that because the exchanges don't keep up on it, I can check out the same history. Like, these were the levels that I bought at. This was my first sell, so I rebought a second car. I sold again, bought again, and then I got a total of 5 doubles out of it. So it's just an example. I use this historical data. Where I have been is a good indication of where I hope to be. History has a pattern of repeating itself. That's why I tend to be more of a technical analysis type person. So I want to break this down so I can look at entries, because when I look back at this chart now, I can see where my previous buy locations were, and I can look for different levels that I would consider buying at if it returns to those levels. But XLM has, really stayed up based on how well it's doing as a coin.
This son of a bitch won't give us an opportunity to buy it back, eh?
Yeah, really won't. So another feature that I really like about it is keeping the exchanges accountable. And that's, I use this to look at my trading fees to see whether or not they're keeping to their 10% or the 25%, depending on which exchange you're doing. So I'll look at different trades and check this out occasionally just to see how much they're charging me. And I was really very stunned at how much I was paying them. So it really sort of helped me keep them accountable. And I have written to exchanges on a couple of occasions, telling them, hey, you're taking a little bit more than what I thought. So
well,
this
cool.
has been.
Did they correct it?
Yeah, they have corrected.
Oh wow, that's cool.
So that's worth knowing. I mean, when these trades were made, I paid $7,000 in fees. Compared to now, because the market is that much lower, it's only $4,239, but it's quite a bit of money.
No doubt, eh? Jesus. You wonder why these guys are getting rich, eh? Running these exchanges.
Like $1 billion companies now running these exchanges. So I have found this tool to be really, really, really useful. And there's a free sample of it where you can enter your trades. You can work with this to import your trades using the API. So it automatically syncs your trades, which is really, really cool for most of the different exchanges. Or you can manually load them through a CSV file. And it'll work with a lot of different wallets and whatnot. But the one of the things that I really wanted to mention about this product is, well, it does the taxes for me, which makes it really easy. But I got to tell you, these people have fantastic support. I've never seen anything like it. If I email them a question, they will email me back the same day, next day, friendly. It's always the same person, but just for all the stupid questions I've asked, they're incredible and very patient. So I think that alone is a reason to consider it. So that's one tool I use fairly religiously and almost daily, and would absolutely recommend. I know some people use Bitcoin.tax. I don't have any experience with that one, but I'm happy to give you guys a referral code that gives you 10% off. And full disclosure, it does something for me, but I have no idea what it's nominal. But it is a 10% code, or there's a free sample of this product. And so for what it's worth, let's go a little bit further. I want to share one more thing with you, just to keep this brief. I want to share with you Coin Checkup. Now, my strength is more in technical analysis, noticing patterns in charts, things like that. But my weakness has generally been fundamental analysis, and that's where I've really loved Coin Checkup. Coin Checkup, looking at Stellar again, has a lot more features than I was even aware of. And if you folks aren't aware of this service, it's free. Although I do recommend signing up, because then you can save the changes and adjustments that you make to this. But this gives you an algorithm score. It tells you like how many coins are out and whatnot. It goes much deeper than a lot of things does. This will show you how they come up with their score. They're very transparent about how they come up with their rankings for different coins. If you're super cheap and you can't afford a TradingView subscription, they have a TradingView chart in here that's like the full chart that you can review on here, and it's the real deal. So I mean, you can draw fibs on them, you can add indicators, you can do whatever you want, And if you have a subscription that's free, you can save your settings on this. But down to the analysis, the purpose, the news, there's a lot to this program. But I've gone a little bit further down the rabbit hole with this as I've gone into the fundamental analysis a little bit more deeply. And they have like an overview with all the different coins where you can sort of glance over in a moment where they're ranking. This information changes almost daily. Some people suggest that whether or not you have how frequently you contribute to GitHub sort of shows the lifespan of your coin, and so it generally has shows you GitHub activity. It's not loading right now, but the global markets, you can do this for a month or a year, just to sort of know like what the market cap is for all these different coins. I found this to be worthwhile. I actually see a little bit of a W over here, so you know, forever the optimist, but let's hope something happens. There was a feature to this too with the coin checkup where they have an arbitrage. That's how you say it, right?
Yep, you're good.
So the arbitrage will show you that, like between Yobit and Bittrex, you can buy this coin Loom right now for 0.02 Bitcoin, and you can sell it for 13.55 right now. And so this, you know, with Ethereum and Bitcoin pairs, so it shows you there's a significant spread here where if you just buy enough at the low price and you go to another exchange, granted you got to deal with transfer time, so it could be a little iffy, but there's quite a bit of opportunity here just to turn around and say, all right, well, we're going to buy something at 0.02 Bitcoin and sell it for quite a bit more with many, many doubles here in a fairly short time span. So, you know, that's one aspect of this account that I really like. It also talks about you know, different pump and dumps that are currently going on, where if it's gained more than 5% over a 5-minute period. And so if I don't really play the pump and dump thing, but I imagine this could be useful to somebody. And there's other things that this does, but I found their subscription to be really worthwhile. It's totally free. They are really open to input. If you find something you think could be better on their site, their support is awesome. They'll get back to you. They love feedback, yeah, and they're very transparent also, which I really like about how they do their algorithm for judging coins to see what they give it for an algorithm score. So that's it. I just want to share those couple of things with you folks, the couple tools that I use. And I hope that this was informative.
Yeah, very cool stuff, man. Canada bot stocks, woohoo! On a crypto. What's going on there? Anyway, yeah, that's really awesome. I see, Riza, you posted Cryptoloom.co statistical price arbitrage page as well. So thank you very much. And you know what this speaks to? This is the old 1 + 1 = 3. So any information that can help us be better, more informed traders, make better decisions, always appreciated. So thank you very much, Adam. And I love the spirit of communal working together. I absolutely love it. So again, thank you very much. Totally awesome. Okay, so I think we covered everything that I wanted to talk about today. Is there anything that I missed, Mr. Mayor?
Oh, no, I think we're good.
Okay, so we've got a couple of tools from Adam. Can we put maybe some of those links into the Daily Brief video? Are we allowed to do that? I don't know whether we can do that.
Sure.
We've got your LA trip document. So anybody who's in LA or planning to be in LA in that time period, you know, be sure to check in on that. If you can, we'd love to see you. We've got RRSP meeting tonight. If you are interested, try and be in the lounge 5-6 o'clock p.m. Pacific time, I'll be on the site getting ready to rock and roll. Got a whole bunch of penny stocks that look really interesting there. Thomas brought the shit today, as always. Thank you very much, sir. Totally appreciate that. And we have class in about 45 minutes. The level 2ers are doing GAN today. And actually, it's really cool because I actually see people working through the GAN workbook, whose methodology. And so we have lots to talk about in class in the next hour or so. So looking forward to that. As you can see on my screen, I've thrown a bid in on Quacker. I don't know whether she's going to take off here, but I'm not going to chase. I'll let my bid work. If I can get in, great. If I can't, no big deal. And then also, too, thank you for reminding me, Jamie. Anybody who's in the European area, and I think I saw Thomas is trying to get Albert to come out to the UK meetup, so that would be awesome. And Albert, that would give you an opportunity to meet Sjord, and I think Julian's actually going to try and be at that UK meetup as well. So, if you are in the UK area or can make that trip, you actually get an opportunity to meet a couple of TRI principals, maybe even 3 of them. So, all right. I think we'll leave it at that for today, unless there's anything I missed. But I think the mayor said I got everything. What do you think? Shall we call it a day? Yep, you're feeling good? Okay, so thank you very much, Thomas. Totally appreciate the hard work and effort you put in. I think we had this pretty well taped in that we were looking for this counter trend rally. We were wondering whether these lows were going to hold, and they did. So I don't think this should be a really big surprise to anybody here. Really great lesson about weekly higher time levels coming into play. I think also, too, some really good information about how we can't chase markets here. And how, we could very easily be running into a bit of traffic in the near term here on Bitcoin. So please don't chase everybody. All right. Yeah, I think that's about it. I will see everybody in class. Thank you very much for everybody's participation. All the best. I think the only thing left to say at this point is a big bye for now.